We apologize for being a little bit late, but we are here. Thank you guys so much for coming to 2021's first Back to the Basics session, where we're going to review the basics and give you an understanding on how to trade the Forex market. Well, really any market, whether it's stocks, commodities, but you'll learn tips and techniques to help you read and understand what is going on in any and every financial market that you may want to participate in the future. So yeah, good morning, Carl. Good morning, Serena. Good morning, Amber. Thank you guys so much for coming on this morning. So with that said, I guess we can move forward and talk about what we're going to talk about today. And I don't know how far you have looked at the videos. I know a few of you are new. But let me ask you this question to see if you do remember something that we mentioned in one of the first videos in our tutorial. So today we're going to talk about just what happens when you're looking at a chart. We can see this chart, and right now what we see is a bunch of candles. And for some of you, it may be unclear what is happening, but we're going to make everything make sense really, really soon. But if you watch the video, we mentioned how there was one indicator that was the most important indicator on your chart, because as you know, whenever we do trade, we always use indicators to let us know what is happening and what could potentially happen in the market. So we do use indicators, and we mentioned that one indicator was the most important indicator on your chart, or technical indicator. Like for instance, we have these, moving average lines, stochastics, ATR, we have, those are indicators, but there was one thing in particular that we mentioned was the most important. Now, since some of you guys, maybe new, I just, want to sort of break down what an indicator is, because you may be wondering, like, what is an indicator? An indicator is any tool, any series of information that really helps us to forecast where this particular instrument, where this particular currency pair or stock will be going. So it's really like a set of information, a series of information, or a tool that we look at. Now, there's one particular tool that's the most important indicator on our chart, or that set of data, and that provides a set of data to help us forecast where price could be headed. So I don't know, well, I kind of gave you guys the answer already. He kind of gave you the answer already. But if you don't know, then that's fine. That's totally fine, because we're going to cover this on today's session, and by the end of it, our hope is that you guys will figure out how this stuff is happening, how price moves, and you'll be able to predict on your own what may happen. But to answer the question, the most important indicator on your chart that will let you know what may potentially happen in the future is the indicator, or let me just make it plain and simple, is price itself. Yeah, in the candlesticks. Mm-hmm. So price, like what price is doing, where price is at, is the most important indicator. So then, we're going to cover more details later, in regards to how to read price, or how to read a price chart. I know right now we see that price is plotted in the candlestick formation. These are what we call Japanese candlesticks, where we have the green candle and the red bearish candles. And we'll talk about that later. I don't want to focus too much time on that now, but we do see that price could be plotted in candles, and we're going to touch on that in a little bit later. But we also can see that price can be plotted also in a line. So then that's how price is plotted, or those are price movement. Yeah, price movements are plotted. They're plotted in those two ways, and we're going to cover those two ways in more details in another meeting. But what we want to give you guys on today is basically the fundamental rules that you need to know in order to read a price chart properly. So that's what we're going to talk about on this morning, the whole notion of how to read a price chart. and how to understand what we call, well, let me just ask you this question to see if you know. Okay, so we mentioned that price is the most important indicator. Now, we mentioned also in one of our videos that price moves a certain way. And let me just give you a clue. It starts with a W. For those who may be familiar, we said price moves a certain way. It always moves in this manner. It never does anything opposite of moving in this particular manner. So who remembers that, or who knows that? If not, then it's totally fine, because we can talk about that on today's meeting. But okay, yeah, so then Jason just responded. He said a price moves in waves, and that's exactly what we mentioned in one of our tutorials on price. Price always moves in waves. Like, you never see price move in a straight line in one direction. Like, you never see price move strongly up in one direction, and when it's heading in that direction, it's constantly moving up. You never see price do that. What you see often is price moves in waves. It comes up, forms this wave, comes down, comes up, comes down, comes up, comes down, comes up, comes down, etc. So then price moves in waves. It moves in this staircase-like formation. It doesn't, like in a zigzag formation. It never moves with one swoop to the upside, or
one thrust.
Yeah, or one thrust to the upside. Like, you can look at this chart right now and see that the market always moves in a wave-like formation. It moves down, then up, and then down, and then you guys get the point. It always moves in that zigzag formation. Well, first, I want to mention how, price is going to always move in a certain direction first. It's either up, down, or sideways. But while it's moving up, down, and sideways in a trend, it moves in a wave-like formation or a wave-like pattern. So now I know maybe he's going to describe that even now, the whole concept of, of course, directionality, and then, trend and
Yeah.
But what we're going to do today is introduce you to something called wave theory. It makes up the basis of everything that we do as technical traders. Like, if you look at any financial market, any financial instrument, whether it's stocks, commodities, ETFs, options, whatever you trade, you always have to understand the whole principle or idea behind wave theory. Price moves in waves. The market moves in waves. You see this consistently, in every financial instrument. So then let's define, let's go into more detail. So then what I'm going to do, let me remove this. What we're going to do is go to some white space. I can go maybe to the daily chart. And what we're going to do is describe what typically happens, in a normal, typical scenario as far as price, how price typically moves. So then there's two components of a wave. There's what we call an impulse wave. And let me just draw this in for you. Okay, so then, we have what you would call an impulse wave. And then after that, we have what is called a corrective wave, or a correction, or pullback. So then we have this impulse, and then we have a correction. Now, followed usually by another impulse wave or impulse leg. Okay, so then if you look at the market, there's certain characteristics with each wave. So then this first leg right here is what we call the impulse wave or impulse leg. And typically the impulse leg or impulse wave is always followed by a corrective leg or corrective phase before we see another impulse leg or impulse phase. So one characteristic is that the impulse wave is always longer than the corrective wave.
Mm-hmm.
Or another word is the thrust. The impulse wave is also called the thrust. That wave is always longer than the corrective wave, which is also called a pullback. So, we have a thrust and a pullback. And then right after the pullback, we have another thrust or impulse leg. And when it comes to trading, what you really want to do is understand how to get involved in a move at the end of a pullback or correction in price. So then you want to ride that thrust to the upside or that impulse move to the upside whenever price is moving up in this fashion or in this manner. But those are the two components of wave theory. There's the impulse wave or impulse leg, or another name for it is thrust. And then there's the pullback, which is usually smaller and shorter than the thrust or impulse. Yeah, I was going to say, another, name for the pullback or the corrective wave is called the retracement wave or the retrace, because it's retracing this previous move to the upside. So you see that the impulse wave is really the wave that really defines the direction and the trend of the market. Because it's a longer wave, it's going to always create either higher highs or higher or lower lows. So then we see that, this impulse, and then we see this retracement. It retraces this impulse move, or it corrects, price corrects and moves lower or pulls back, and then we see another impulse, following that. But price moves in this zigzag wave-like fashion. It's almost like a staircase. Like when someone wants to walk up the stairs, they have to take each step of the staircase. And price action is sort of like that in a bull market or an upward trending market. You'll see that, there's certain stairs, that are certain levels that price develops in a trend. And those are your higher, in an uptrend is your higher highs and your higher lows. But we're going to go into more detail with that later. The whole point of this particular section right now is to really inform you that price doesn't move in a straight line, that you should never see price just go gradually up to a certain level or gradually fall to a certain level. Normally, you'll see price move in a zigzag fashion. And if you don't see it on a maybe a larger time frame, you will definitely see it on a smaller time frame. So looking at this example, we have an impulse wave, a correction, another impulse wave. So then what do we expect to happen after this impulse? Let me ask you guys that question. Remember, there's only two components. We mentioned, okay, right here we have an impulse, then we have a correction, and then we have another impulse. So then what do we expect to happen right after that impulse? Okay, so Rob mentioned correction and Carl mentioned pullback, and the both of you are correct. That's what we should expect. We should expect another correction or pullback, because that's what typically follows an impulse leg. And it's something that will always follow an impulse leg. After you see the impulse, you always have to wait for the correction. And then after the correction, what typically follows? Probably and likely another impulse leg. So this is what we call wave theory. Wave theory is when price makes, consecutive impulses and then corrections, impulse, correction, impulse, or thrust, pullback, thrust, pullback, thrust. So then that's what makes up a wave or the wave theory. Now, let me ask you guys this question. If price was moving in this manner where you see it making this staircase fashion going up, could you say that that price is trending upwards or trending downwards? Is price moving upwards or moving downwards? Now, this is pretty obvious. We're going to break this down to its core components in a little bit. But if this was price, if these blue lines were price, is price moving upwards or is price moving downwards? That's a simple question. Okay. So I know Serena said it's trending upward. Jason said upward. Exactly. So then we know that price is moving upward, right? So then this is the basis of an upward trend. We're going to teach you the basis of an upward trend. And in order to really understand trends, you have to understand wave theory, because it's waves that make up the trend. It's these impulsive waves and corrective waves that make up trends in the market. So then let's define this area right here as okay, as your starting point. We're going to call this right here our starting point, or our initial low. So that could be our initial low, right? So, you know, we have this initial low, and then price comes up and forms, let's just say it forms an initial high, which is IH. We call that an initial high. So then on this pullback, price forms what? Well, it forms what we would call HL, which means what? A higher low, right? Because this low right here on this pullback is higher than this initial low down here, or this starting point, this initial low. So then we have a higher low forming, and then when the price pushes up and when it breaks this initial high, then what is this called right here? What is this high called, this next peak? What is that called? Well, let me put it down. It's called a higher high. Yep, Rob, you got it, a higher high. Yep. So then we have a higher high right here. And then what follows is obviously a higher low. Let me just grab this. And then from there, we have another higher high again. So that's pretty much the basis of an upward trend. An upward trend is always forming higher highs and higher lows. So then that's one thing you have to understand with the financial markets. An upward trend is always forming higher highs and higher lows. And an acronym that we use for an upward trend, let me just bring this here. Upward trend equals HHHL, which stands for higher highs and higher lows. This is what we will always see in an upward trend. We will see it consecutively. We will always see higher highs and higher lows. Now, okay, well, I think Marvin wants to say something. Well, yeah, like, you know what I was going to say, like, if it's an upward trend, then that means its motivation is to reach, you know, higher highs. Like, it's trying to rally. The market is trying to ascend or appreciate and go higher. So then one sign of an upward trend is that you're going to always see higher prices form throughout that move. Like, it's trying to break into new fresh highs. So then in an upward trend, you're going to always see this wave-like fashion as the market moves between higher highs and higher lows, interchangeably going back and forth between higher highs, higher lows, and it's making brand new fresh highs. And that's what really identifies or indicates that it's in an uptrend, that it's in a bull market, and that you know, of course, the buyers are in control. Yeah. So let me ask you guys this question. When price is moving in an upward trend, when it's making higher highs and higher lows, should we be looking to buy the market or sell the market? Should we be looking for buying opportunities or selling opportunities? Let me ask you guys that question, because that's very key, you know, to understanding what to do in a particular environment. Okay. I know Serena said sell, and okay, does anyone else want to take a stab at it? Remember, the market is moving up. Price is moving up. So, yep, okay, yeah, Carl, And yep, and Jason said you want to look for buy opportunities. Whenever price is moving in this upward trend, when it's making higher highs and higher lows, you typically want to stay on the side of the trend, which is upwards. Remember this whole famous phrase, the trend is your friend. The trend is your friend. So if the trend is moving upwards, if we have an upward trend, then you want to trade up. You want to look for opportunities to buy because we're expecting for price to go up, to go higher. We want to buy low and sell high. So then we're expecting price to go high. So then we want to look for buying opportunities. So then that's an upward trend. An upward trend always make higher highs, higher lows, and you want to look for opportunities to buy. Yeah, because in an upward trend, you're expecting it to form eventually a new high. Like, what's the point of selling if the trend has already told you that it's breaking and breaching fresh new highs on each new impulse? Like, each of these impulsive waves is breaching and creating a fresh high. So then if you're expecting that the market is in an uptrend, then you want to buy because you're expecting that at some point it's going to breach and form a fresh new high again. So then you don't want to be found selling unless the market tells you you should be selling. And we'll discuss that eventually later on. Yeah. Yeah. So, but you know, well, I mean, you could sell an uptrend, but it's a counter trend. Yeah, it's a counter trend. It's something that's more detailed, and there's things you have to look at in order to know what to do. So Serena, you know, like you're not completely like you. How can I put it? Like you're not completely wrong. Like there is a way you could sell an uptrend, but that's too complicated. Yeah. Like if to keep it general, you want to buy in an upward trending market. Yeah. And you want to sell in a downward trending market. So I think Melvin, he's gonna do the sell. Yeah. I'm gonna talk about that. But yeah, before I do that, one thing I want to mention is that you want to buy the dip. So then you'll buy every time price makes a higher low. So then this is where you'll buy right around here. Price pushes up, you'll wait for that pullback. At the end of that pullback, you're gonna look for another opportunity to buy. That's how you should be trading the markets, you know, if you're going to trade with the trend. Okay. So let's just assume that something happens, right? And all of a sudden, price does something like this. Okay. So then in this case, what do we have right now? Because right now, it seems like it's not as clean and it's not as clear as far as what is going on. You know, whenever we do see something like this, where price goes down and it forms something that, you know, okay, let me ask you guys this question. Based on how we've drawn this, like whenever we draw an upward trend, we're always expecting price to form a higher low after a higher high, right? That's what we're expecting, right? But what happens when, or what do we call this when price pushes lower and it does something like this? Is this a higher low? Let me ask you that question. Is this a higher low at the end of this move right here? Are we in a higher low scenario now? Yeah, no, right? Nope. Yeah, you guys are correct. Because right now, this low right here is lower than this previous low right here. Do you guys see it? This low right now is higher than this previous low right here. I mean, lower. Is lower than this previous low. Therefore, what we would call this right now is, does it make a higher low or lower low? Well, we just answered it. It makes a lower low, right? So let's do this. Price makes a lower low. LL stands for a lower low. Okay. And whenever price makes a lower low after trending to the upward side, then that could mean that things could be changing. But let's now define what typically happens. So then following a lower low, what we would typically see is a lower high, or LH represents a lower high. So we see this lower high.
Because it's lower than the previous.
Yeah,
high.
because it's lower. This high right here is lower than this previous high where this peak is right here. Okay, and as soon as you get a lower low and a lower high, then you can pretty much say that we're probably in the middle of a downward trend. But anyways, let's complete this. After you typically see the lower high, what do you see? You see another impulse, and that impulse usually forms another lower low. So let's talk about that right now. So then right here. So let me just break this down for you. So then in this example right here, what we saw was that price formed its higher high. And then what we're expecting is a pullback, right? We're expecting a pullback, and pullbacks are always shorter in length than the impulse legs or than the thrust in price. In this case, we see that the pullback is actually larger than the impulse, than the prior impulse leg higher. So in this case right here, is this a pullback?
Would you consider that a pullback?
Would you consider this a pullback? This move right here, let me just say, this move right here, from here to here, this leg right here, would you consider this leg a pullback? Remember what we said, like pullbacks are always smaller and shorter in length than the impulse leg or the thrust in price. So then when the price was pulling back, it actually made a larger move than expected. So then,
like as I said, so then would you consider that a thrust?
Or yeah, would you or an impulse?
Or a correction.
Or a correction. Yep. Okay. So it makes it lower low. But okay, in this case right here, okay, yep, Serena, you're right. Yep. In this case right here, what we thought what we thought would be a pullback eventually wasn't a pullback. It was a thrust in the direction lower. It was an impulse leg lower. So then this is when we know that something could be changing. So then right here,
like the impulse changed direction, like the thrust changed direction. It's no longer thrusting to the upside, but this could be a sign that it could be thrusting to the downside or lower. Like it could be changing direction.
Yeah, it could be changing direction. So then we have this lower low and then a lower high form and then another lower low. And whenever we see price making lower lows and lower highs, what type of trend are we in? Like, just think about it. In an upward trend, it's always making higher highs and higher lows. HHHL. In a downward trend, oops, I pretty much just said it. Yep, a downtrend. Exactly, Serena. So in a downtrend, or when the trend is downward, the market or price is always making lower lows and lower highs. So then let's define that right now. We have downward trend equals lower low and lower high.
It's constantly making fresh lows.
Yeah, it's constantly making lower lows and lower highs, new lows and new highs. So then in a downward trend, let me ask you this question. When price is making lower lows and lower highs, should we be looking for buy opportunities or should we be looking for sell opportunities? Let me ask you that question. Yep. Okay. Jason said sell. Exactly. You'll be looking for selling opportunities. And what you will do is wait for price to pull back and create a lower high. Like in this case, a lower high. Let me clone this and bring this over. Price typically will create a lower high. And after that lower high, you will look for an opportunity to sell. Remember, we want to always sell on rallies or corrections higher or pullbacks higher. So then we'll look for an opportunity to sell right around here. And then following that, we typically see another impulse led.
Yeah. So this is what, analysts, refer to, buying low and selling high. Because in any market, whether it's, real estate, whether it's the stock market, whatever financial market you're in, it's always better to buy at a discount price. So then even when this market was trending upward, in this particular example, you always want to buy after a discount. Like when it forms this fresh impulse to the upside, the price is high. The price of the asset is high, but then you don't want to buy at the peak. You don't want to buy when that particular asset is expensive. You want to wait for it to be discounted. And that's what the correction wave is. The correction wave sort of helps to make the price, bring the price lower and bring it in, so you can buy at a discount.
At a cheaper price.
At a cheaper price. So then you wait for the correction and you buy at the end of a corrective wave in an upward trend. You would buy at a discount price. You would buy low, and then you would trade this to the upside. But in a downward trending market, you will sell high. In this case, we know that it broke. It formed this thrust to the downside. So all we have to do is wait for price to sort of increase a little bit to correct upward and give us a higher price so that we can sell at a more favorable price to us.
Because whenever you have an item, you want to always sell at a higher price. When you possess, like if you have a car, you want the price of the car to be higher than the value. You want to get it at the best price that benefits
that
you.
favors you. Yeah.
So it's like with a house, when your house is on the market, you want it to appreciate some, you want to sell it at a higher value in order for you to get something out of it. So then it's the same way with markets. You want to always look for opportunities to sell high. And typically in a downward trend, that always takes place after price makes a correction or pull back higher, forming a lower high scenario. And then you look for opportunities to short and sell. So this is how the market typically moves. And if you understand this, then that is really a good piece of the puzzle when it comes to cracking these codes on how to really trade the market. And I know there's different teachings, and like we talk about also patterns and different things like that. But if you understand wave theory, and if you understand how to read a price chart, how price makes higher highs and higher lows, then all of that is pretty much summed up in understanding charts. Because even in this case right here, I know we talk about certain patterns in our webinars, and I'm not going to really delve into this deeper. I'm going to wait for another back to the basics session. But what pattern is forming right here that we've talked about in some of our live trading sessions? It's a classical chart pattern. Yeah. So let me just maybe just draw this in or mark this in. So then we have price making something like this, where this higher high right here, and then price comes up, makes another higher high, and then it comes down, tests the lows down here, and then it makes a lower high right here. So then this is what we typically call a what? For those who do know, okay, yeah, Carl said it. He came out and said a head and shoulders pattern, right? So it's head and shoulders. We have the head and we have two shoulders. This is the left shoulder right here. This first higher high, or where the higher high is the left shoulder. Then we have the head where this higher high is, this peak up here. And then we have the right shoulder right here. But yeah, which is the lower high. The lower high is the right shoulder. But we're not going to talk about head and shoulders. I just wanted to point out the fact that if you understand wave theory and how to draw in your price waves and read a price chart properly, you'll see those patterns played out in the chart, and you'll know exactly what to do at any given moment. So then with that said, what we did was just give you an outline of how to read a price chart now, or really we gave you an idea of wave theory. Next, we're going to show you how to apply this in a real environment and, with the charts below. So what we're going to do is show you how to analyze the waves on a real price chart, because it's easy to explain everything when you're drawing it out this way. Like this concept is easy. Upward trend, higher high, higher low, downward trend, lower low, lower high. But in the real market scenario, it's not that obvious. So then what we're going to do is go down and actually show you how to read a price chart properly. So then let's go down, and what I'm going to do, I'm going to go to the 1 hour chart, because I think that'll be a little bit better. Okay. So in this case right here, we can start. Oh yeah, we'll start. Let's just start right here. Well, okay. So let's just do this. Boom, boom. Right here. So then we have this move down right here. Or what we can do, but really we can start anywhere. Let's just start here at this low. Okay. So then let's just say that, price moves up, and let's just assume that we don't see anything right here. Let's just assume that, we're just starting things from this impulse, this starting point right here. So then we have this move, price corrects lower, right? And forms a what? Okay, so let's just assume that this is our initial low right here. Initial low. Price pulls back and it forms a what? A higher low right there, right? And the reason why we know it's a higher low is because this low right here is higher than this initial low. This is where the impulse leg began. So we have this impulse leg, price corrected. It will, of course, it was a complex pullback, but the reason why we can't use this right here is because we don't see the next impulse leg. Like price pushes up, but it doesn't test these highs. So then
it's just another small.
Yeah, it's just another small, like part of, it's just a part of that pullback or part of that correction lower. So then we ignore this move right here and we look for the next area, next lower price that price pulls back to, and it's this right here. So this will be considered our higher low. So then, we don't know for certain if we're in an upward trend yet until we see something else. So what is it that we need to see next in order for us to know that we're in an upward trend? And I'm going to give you the secret in a little bit, but what do we need to see in order to know that we're in an upward trend? Do we need to see a lower high? Another lower low? What do we need to see to know that we're in an upward trend? Remember what we said the definition of an upward trend is. We gave you the definition above. Okay, Rob said a higher high. Exactly. So then we need to see a higher high. So then what I'm going to do, I'm going to give you a tip. Okay. So then our initial high was here. And I know we should have added that right here. This was our initial high. Let me just add that. IH. Some people call this a new structure high or whatever. So then we have our high right here, initial high. And what we want to see, we want to analyze the time when price breaches this high to the upside, right? So then that's what we want to look for. We want to look for that to happen whenever we get a breach or violation of this high. So when does that happen? Does that happen right here? Let me actually, does it happen here? This is A. Does it happen here? This is B. Or does it happen here? We're going to call this C. So A, B, C, like when do we get a breach, or when does price create the higher high and higher low, or the higher high? Let me ask you guys that question, just to keep it simple. A, B, or C? Yeah, all right, yeah, thanks, Amber. Yeah, I just saw your message. Thanks for coming out. But when does it break this high right here? Is it A, B, or C? Yep, it's C, right? It's C. C is when we get the violation of high. So then we ignore everything else that happened right up into this point. And what we do next is draw our next wave. Our higher high will be from this low, this higher low, all the way up to where C is right here, which is our higher high. So what we'll do is add this and call it our higher high. So we have a higher high right there. So then that's the basis of how to read a price chart. So then after a higher high, we expect a higher low, right? When do we get that higher low? Well, we get it right here, right? Price forms a higher low. Let me just clone this. Price forms a higher low. And remember, in order to know what the next impulse leg would be, we have to see a violation of this high. And when do we get that? We get that right. Well, we see it right here, but this is a one candle pullback. We ignore that. So then the next way we'll draw is from here to here. Right here. So, and that is what we would call a higher high. Just keeping it simple. Okay. So then in this case, you know, whenever we saw price form this higher high, it broke above this high, then that's when we need to look for buying opportunities. So everything that we're talking about in our webinars, as far as looking for three-way pullbacks, all that stuff, you'll apply those techniques once we get this higher high, because now we know that the market is changing. And to be honest with you, we could have taken advantage of this move up, to be honest. But, you know, to play it safe, what you could do is something like this, where you can wait for price to give you a clear sign that the bias is shifting to the upside. Now, let's move on, because in this example next, we see price move down. Now, let me ask you this question. In this move down, is this more like an impulse leg, or is it a pullback in this move down? Like this most recent leg down. Are we in an impulse, or are we in a correction in this leg down? Remember what we said about pullbacks. Pullbacks are typically smaller than, you know, than corrections. I mean, than impulses. So a pullback wave is typically a lot smaller, right? So what does that tell us? Okay, Jay said impulse and Rob said a new thrust. Yep, a new impulse, a new thrust may be forming. So in this case, we could say something like this. Let me remove this right here. So then right now we see that price likely formed, it broke and it formed a lower low right here. And now we have this new impulse. And some people would call this a new structure low, all that stuff, but it formed a lower low, right? So then after a lower low, what do we expect to happen? We expect for, and this is an impulse. So after an impulse, what do we expect? After an impulse or a thrust in price, what do we expect to happen next? We expect another what? What do we expect to happen after an impulse? After an impulse or thrust in price, we expect, this was, okay, yeah, I know he said a new high, but what typically happens, remember on a wave, we see impulse waves, corrections, and impulse. It always moves in that fashion. We have the thrust, then we have a pullback, and then we have another thrust. So then since this is a thrust lower or an impulse lower, what do we expect to happen next? we expect for a, yeah, of course, yeah, a lower high, but a pullback, right? A correction, which is the lower high. So then in this case right here, price corrects and pulls back. And right now we have a lower high, right? We have a lower high. And now we have the two components of a downward trend or downward movement. We have both the lower low and the lower high. So guess what we can do right now if we wanted to? We could look for an opportunity to sell. And as you know, right at the end of this move, price fell down, we would have made some money, and it formed a what? Another lower low. So then this is how you read a price chart. And once you understand this dynamic, it will make things a little bit more simpler for you. And these are rules you should always apply. Now, moving forward, do we get another lower high? Let me ask you guys that question. Moving forward, do we get another lower high on this chart after price formed this lower low? Yes or no? Yep, no, right? No, we don't see it, right? We don't see a lower high, right? Price does what? It breaks this high, and it does what? It forms a higher high, right? It forms a higher high. And if we wanted to, we can draw this in, but for the sake of time, I'm just going to do it from here, right? It forms a higher high because price broke this high. Now we know that we're definitely in an upward trend. So price formed a higher high right now. So it formed a higher high. And then what do we expect to happen after price has this impulse and it forms a higher high? Well, we expect a higher low to form. So it's pretty simple. You know, right when price forms that higher high, we'll be looking for that higher low to form. And once that higher low forms, guess what we're looking to do? We're looking to now buy this particular asset. And as you can see, price moves what? It moves higher. So we'll be looking to buy once we get this dip in price, and then price moves up. And it forms another higher high. Yep, but that's the basis of really understanding how to read a price chart. If you understand how to do this one simple thing, then you will be on the right side of the market more times than you are on the wrong side of the market. So this is key, and learning and practicing this technique is key to understanding what is really taking place in the market.
Yeah. And, of course, this basic, skill of reading a price chart, like it will really help you to sort of clear out, like it'll help you to sift through the noise and then really clear out or really decide what side of the market you need to be on. Should you be buying or selling? And, because even if you just choose the few opportunities that we saw on reading a price chart, like if we just bought in those few areas, even though we could have took advantage of some of those intermove swings, because there are particular swings and miniature pullbacks within those impulsive waves. But that's more of an advanced, topic that we'll cover, later. But, even if you just selected the pullbacks that we identified on this chart and you bought at those lows, like, that's pretty simple. Like it sort of helps to simplify trading and why we buy at certain discount prices. but yeah, I just kind of wanted to just point that out and just let you know that identifying the trend, what type of trend it is, and in this case, as you read the price waves, you can identify what type of trend it is, and if it's a bull trend, meaning an upward trend, then you should buy on the pullback.
Yeah, price always makes higher highs and higher lows, and you should look for opportunities to buy.
Yeah, to buy at those higher lows, in a bull trend.
And in a downward trend, the downward trend usually produces lower lows and lower highs, and you want to look for opportunities to sell at the lower highs. So then that's just the simplicity of it in a nutshell. Like whenever price is trending upwards, you always want to look for buying opportunities. You look for buying opportunities on the dips in price. Price in this case formed another higher low right here. And then what happened? It formed a higher high following. A higher low, higher high. In a staircase fashion, higher low and a higher high. So during this time, it was pretty easy to make money because you were on the right side of the market. And as you guys know, price continued to push higher. So then this is pretty much how you read a price chart. You have to understand the concept of higher highs and higher lows, and you have to understand when those higher highs and higher lows are violated, then we have a change in sentiment or change in direction. So we can see that in this case, every time we drew in a higher high, it was every time we drew in a higher high, it was violated. So in this case, we drew a higher high because this previous high was violated. Now we put this line at this high. We know that the higher high is this move up here because this previous high right here was violated and we saw price break and close above it. So it's pretty simple to really define the higher highs and higher lows. The most important component in a trend, I know the trend makes up higher highs and higher lows, but the most important component that tells you directionality is really the higher high move. And each time price breaks and closes above the high, it's forming a higher high, which means that we should be looking for opportunities to buy each and every time. So price broke this high. And this is a good one to use. This is a good example right here. Because in this case right here, does price, for one, in this move lower right here, are we in a pullback phase? No, because now this is a long move, right? This move is not small like these pullbacks were. This is a long move. So this could mean that we could be in the middle of an impulse way, right? Or some sort of change is happening. And whenever you see that change starting off, then sometimes it's best to wait until you get more clarity. But we see that price created this equal low right here. And well, we can just draw for right here. So then in this case right here, we see that price broke and closed above this low, but it's not really significant. From here, what you want to see is a, in this case, a lower high. But what happens? Price corrects. And, it really doesn't create a new. So let me just draw this in. So then we see this correction right here. Price forms what we would consider to be a lower high. And what we're waiting for is a violation of this low. But, we don't really get that. What we see right here in this example, we see that price makes an attempt to go low, but it doesn't reach it. It doesn't break this low, but it comes up and it retests this high right here. And it forms what we would call an equal high. So then we have price forming sort of like an equal low. And then it comes back and it forms an equal high. And whenever you see that, just stay out of the market because we don't know what is happening. You have to have the market tell you what is really happening. And you have to see consecutive higher highs and higher lows and consecutive lower lows and lower highs in order to know what is happening. So then in this case right here, we have price create. Let me clone this. Price creates a lower low in this case. And then we see price give us another impulse leg lower. Now, are we in the downtrend yet? No, we're not, right? Because price formed an equal high. We can let me just clone this. right here, price forms what we would call an equal high, or EH. So it doesn't form a lower high. So then we're not looking for a sell opportunity, right? It forms an equal high. Price then comes down and forms a lower low, right? So then are we looking for a sell? No, not yet. Price would have to form another lower high scenario in order for us to really be confident that, you know, we're in a trend reversal. And we need to see price really violate this low again before we know for certain whether we should look for a sell opportunity. But to make a long story short, what did price eventually do? Price went up. It didn't really test these lows again. It went up and created what we would call a higher high. So at this particular moment, this is when we know that things could be shifting and we may be seeing more clarity on what is happening. So here we see price corrects, forms a higher low. And as soon as price does that, that's when we're anticipating this move to the upside, which is what happened. So price formed another higher high. So I know we're going to cover this all in more details later, but once you understand these simple rules on how to read a price chart and how to look for lower lows and lower highs and higher highs, higher lows, then it makes things a little bit easier for you. Oops. It makes things a lot easier for you. So yeah, that's pretty much it. I don't really have too much really to share, you know, at the moment. But yeah, this is the basis of how we view and analyze the markets, by understanding how to read a price chart, how to draw in these waves, understanding wave theory, understanding higher highs, higher lows, understanding what constitutes an impulse and a correction, or a thrust in price and a pullback. But once you understand those components, then it makes things a lot more easier for you. So that's pretty much it. I know we don't want to inundate you with so much information on this back to the basic session. We wanted to keep it simple and we wanted to keep it brief. But are there any questions about anything that we mentioned on today, as far as how to read a price chart, how to draw in your waves, understanding wave theory? Are there any questions? Okay. Yeah, thanks, Serena, for your comments. Yep, thanks, Carl. Yep, but I would suggest that you just keep practicing. Keep practicing this. Like, look over your charts, practice this all the time. Because once you understand what you need to look for, then it makes things a lot more easier for you. So our job is to make things easy for you. So that's one of our goals, is to try to simplify it as much as we can, to make something that looks complex simple, to simplify it. All right. So if there aren't any questions, we can end early on today. But thank you guys so much for watching today's Back to the Basics session. I know a few of you will watch the recording. So let me know if you have any questions. You can contact me either on Telegram or through email, and even do the discussion forum. I know we do have that, but I want to start using that more. So we'll see. But we do have the Telegram group as well, so you can contact me there also. But that's it. Thank you guys so much for coming to today's Back to the Basics session. And we'll definitely see you on Monday morning. Stay blessed, stay encouraged, and we'll definitely talk to you guys soon. And remember to always count your blessings, not your pips. Talk to you later. All right. Okay then. Okay, bye.